The market closed green today, and it was a complete lie. Two of the Magnificent Seven sold off ahead of their own earnings this week. Apple was down, Amazon was down, AMD got destroyed, down nearly 4%. Gold sold off, Bitcoin got hammered, and anyone telling you today was a record day, I would say probably didn't even open the chart. So stick around with me for the next 10 minutes. I am going to show you what actually happened, what it means for tomorrow's Fed decision, and 4 mega cap earnings reports, and the 4 concepts that will make every market headline make sense for rest of your career. So let's go. If you're new here, I do these every market day, no fluff. The goal, by the end of every video, you understand the forces moving the market, not just the numbers. So hit subscribe if that's useful. Now, what actually happened? So S&P futures, they closed up about 0.16%. NASDAQ up about roughly about 0.1%. Now, if you look at some of the names underneath the flat tape, Micron was up 5.6%. Nvidia was up about 4%. Let me just pull up Nvidia here. So it was up about roughly about 4%. Intel up almost 3%. Where's the Intel here? Yep, right there. Roughly about 3%. And Google up about roughly about 2%. So let me just pull up the Google here. Roughly about 2%. Sounds like a rip-roaring day, right? Maybe, maybe not. Now, look at the other side. Okay, so let's look at AMD. AMD was down about 3.8%. Apple was down about 1.27%. And then Amazon was down about 1% or so, 1.1%. Microsoft was basically flat today. Tesla, flat. Meta, flat. Oracle, Palantir, they're both flat as well. And then the macro picture, which is the most interesting part, gold was down 1%. Gold was down about 1%, and Bitcoin down over 2%. And oil was up almost 2%, sitting at nearly $96 a barrel. And sitting at $96 a barrel. So what's interesting here is the indices were basically flat to slightly green. 3 semiconductors stock ripping, 2 Magnificent 7 names selling off ahead of their own earnings. Gold and Bitcoin both down, oil up. These moves don't tell a rally story from any angle to me. They tell a rotation story, and once I show you what that means, you'll never read a market headline the same way again. So that brings me to the first concept, the most important one of the day, rally versus rotation. The thing is, a rally is when most stocks go up together. The whole boat lifts. Every sector participates. Breadth is wide. You can buy almost anything and make money. Whereas on the other side, a rotation is a little bit different. A rotation is when money leaves one part of the market and floods into another. The total market level barely changes, but underneath there's a violent reshuffle. And if you were to ask me, today was a textbook rotation. Money came out of mega cap tech reporting earnings this week, namely Apple, Amazon, AMD, and it flooded into the AI memory and chip leadership, Micron, Nvidia, Intel. Why does that distinction matter? Because in a real rally, you can hold almost any large cap and you'll be fine. In a rotation, the wrong stock can get destroyed. The wrong stock can destroy you on a green day. So let's say if you owned AMD today, you took a 4% loss while everyone on X was screaming about new highs. That's the trap. So the lesson here is when the index is green but the breadth is split, ignore the headlines. Look at which names are leading and which are bleeding. The leaders are telling you what's getting accumulated. The leaders are telling you what's getting distributed, sold by the people who know something you don't. Which brings me to the second concept, and this is why today was actually bearish under the hood. Defensive positioning ahead of earnings. Apple reports Thursday after the close. Amazon reports Wednesday after the close. Both are mega caps that move the entire index. Both report this week, and both got sold today. So let me just pull up the Amazon chart. As you can see. Now ask yourself, who sells a mega cap right before its own earning report? Not retail. Retail buys everything. They go long calls and pray, right? Institutions sell. Hedge funds reduce their exposure. Smart money raises cash because it just makes sense holding on to cash before a binary event is about to unfold. So when the stock is already at all-time high territory, it's bad. The downside, if the print misses, is brutal. The upside, if it beats, is muted because everyone already expects it to beat it. So when you see Apple and Amazon both bleeding the day before their own earnings, that's not random. That's the smart money quietly stepping out of the side door. And here's the layer the news won't tell you. Gold also sold off today. Bitcoin also sold off today. So that these are the two assets that usually catch a bid when people are raising cash for risk events. Both read the same day. When risk on assets and safe haven assets both sell at the same time, it usually means one thing. Somebody is raising cash, period. Not rotating into hedges, just liquidating into cash because they want dry powder for whatever happens Wednesday and Thursday. This is a much more bearish setup than a green index would have you believe. Which brings me to another concept, and this concept is the big one for this week, the Federal Reserve. Okay, so tomorrow morning, the Feds kick off the FOMC meeting. So it's going to be a 2-day event, and the decision and press conference, that will be on Wednesday at 2 p.m. Eastern. Here's what they actually do in plain English. So basically, the Feds sets one number, the federal funds rate, and currently between 3.5 and 3.75. Every other interest rate in the economy, your mortgage, your credit card, the rate of the U.S. government pays off debt, anchors off that number. So when the Fed raises rates, borrowing gets expensive, the economy slows, inflation cools, stocks usually struggle. And when the Fed cuts rates, borrowing gets cheaper, growth picks up, stocks usually rally. Most people expect a hold on Wednesday, which is not a surprise. Not a surprise. So that's a no change. So that's not what the market is watching for, because market already has priced that into what's going on right now. What the market is watching for is the language, the exact words in the statement, the tone of Powell uses in the press conference. Because think about this way, one word can move trillions of dollars, right? It literally can move trillions of dollars. Meaning, if he hints cuts are coming, which I'm gonna tell you, like it's rare. It's not, the cuts are not coming anytime soon. Then the market rips. On the other side, if he is sounding worried about the inflation and pushes back on rate cut hopes, and then he's sounding hawkish, and the market it's going to start selling off. The dollar rallies, the yields jump. Now, overlay that on what we just talked about. Smart money already raised cash today. Who knows? They're probably going to be raising some more cash tomorrow. There are some levels that I'm going to be watching tomorrow, which I will explain just in a bit. But you have to understand that they know Powell is binary. They know 4 Meg 7 reports drop Wednesday afternoon in the same window, and they want it to be flat going in. At least that's what it looks like from the price action today. Now, here's what's coming. Wednesday after the close, Microsoft, Alphabet, which Google, Meta, and Amazon all report earnings. 4 of the Magnificent 7 in one window. Then Thursday after close, Apple. So Wednesday afternoon looks like this. 2 p.m. Eastern, Fed decision. 2:30 p.m. Eastern, Powell speaks, press conference. And then between 4 p.m. to 5 p.m. Eastern, Microsoft, Google, Meta, Amazon all drop their numbers. That is a loaded barrel. You have to understand, that is a loaded barrel. Now, here's a question every one of these reports gets judged on. And this is the concept I want you to remember. AI capex versus AI revenue. All 4 of these companies are spending tens of billions of dollars building data centers, buying Nvidia chips, training AI models. That's the capex, capital expenditure. The market wants to see that spending turn into an actual revenue, real customer paying real money for AI services. The cleanest tell is Microsoft's Azure cloud growth number. The street is looking at around 38%, above 40%. AI thesis is confirmed, then the semis will rip. So let me just pull up the semiconductor index here, SMH. So like I said, if the numbers, so let's say above 40%, AI thesis is going to be confirmed. Semis is going to rip. Everything in software re-rates, it's higher. Below 37%, narrative flips to AI capex is outrunning revenue. And Nvidia, Broadcom, and the entire stack gets repriced, and they will get repriced quickly. Now, here's why MU was up 5.6%. Where's MU? Yep. So MU was up 5.6%, but AMD was down. What was he down? AMD was down 4%. Interesting, isn't it? But they're in the same sector. So how come they're telling a different story, you may ask, right? Well, Micron makes the memory chips that go into every AI server. So the demand is real, supply is tight, pricing is up. Whereas AMD competes head-to-head with Nvidia for AI accelerators, and Nvidia is winning. So today the market said, long the AI memory winner, short the AI accelerator loser. That's the verdict, not a coincidence that you need to be paying attention to. So the wild card, the market keeps trying to ignore, right? We have to factor that as well, right? The US-Iran negotiations are stalled. Today, oil pushed to roughly $96 a barrel on fresh tension in something called the Strait of Hormuz. And, you know, if the Strait of Hormuz is blocked for any extended period of time, that's going to have an impact on inflation. So the 2% pop in oil today, it's not just an energy story. It's a Fed story. It's an inflation story. It's a tech multiple story. And it overlaps with everything else we just talked about. Smart money raising cash, Apple and Amazon selling off pre-earning, Powell talking Wednesday. If oil is still climbing into Wednesday morning, Powell can't sound dovish, which means risk assets bleed, which means the rotation out of mega cap tech we saw today accelerates. All of these threads connect. Okay, so tomorrow, here's what I'm watching. Tuesday is FOMC day 1, so no statement until Wednesday. But positioning starts on the open. We also get consumer confidence at 10 a.m. Eastern, JOLTS job opening, and a 7-year treasury auction. Any of those can move the tape. So I got 2 scenarios for you here, and then you can make your own educated decision tomorrow. So for the bull case, let me just pull up the S&P. Okay. So for bull case, I would say that, let me just go ahead and pull up actually ES. So for bull case, I would say that, where is it? Yep, right here. I would say for bull case, S&P futures need to hold 7,200 on the open. Nvidia needs to hold 214. So let me just pull up Nvidia as well. And Nvidia needs to hold 214, which is right about in this area here. So I would say probably right here. So Nvidia needs, like, if Nvidia, like, it needs to hold 214, MU needs to stay above 520. Let me pull up MU also. So above 520. So MU needs to be above 520, which would essentially meaning that this candle that we had today, as long as it doesn't lose that candle tomorrow, and that's the same thing with, you could say, for Nvidia as well, as long as it stays above this breakout level, which let me just show you, it's a breakout level right here, right? As long as it stays above its breakout level, then, you know, that's good. And if they stay above like these levels, like if the levels are held until, let's say, 10 a.m., then I would say the rotation continues. Money keeps flowing into AI memory and chip leaders. So I would say then trade the trend. Nvidia, MU, those are your continuation play. At Intel, if it stays above 84, right? So that's your bull case for continuation play. Whereas on the other side, for the bear case, right? So if I pull up the ES again, like if ES start losing, let's say 7,000, then that becomes a problem. Same thing with Nvidia. Let me just, so that you know, that becomes a problem. Nvidia, same thing. If it starts to come right back into these levels, then that becomes a problem, which is about 210-ish. And Apple and Amazon sell off again. So let's say if the continuation is there on Apple, so let me just switch it to the daily chart. So if the weakness continues and this starts coming down towards 260, watch out for that. And same thing with, let's say, for Amazon, if the selling continues, it speeds up and it starts coming into 255-ish area, just watch out. That's a sign of a deeper sell-off that may begin on Wednesday. If those three are true, the rotation we saw today flips into outright distribution. Mega cap is no longer just defensive; it's actively being dumped. So you fade the rallies, you size smaller because of overnight Fed risk, and you watch the Dow. If it's down 0.5% in the first 30 minutes while the S&P is flat, the breadth crack widens. Same signal as today. So I would say the first 30 minutes, eyes on Nvidia. If Nvidia holds 214 for 15 minutes, semi-leadership is voting yes through the FOMC. If it doesn't, sit on your hands. Let the dust settle. So really, guys, the lesson of the day is the one I want you to actually remember. A green index is not a green day. When indices close near all-time highs, but two of the Magnificent Seven sell off, AMD get destroyed, gold sells off, Bitcoin sells off, that is not a bullish tape at all. That's smart money stepping out of the side door before the next event. The green print at the close is the lagging indicator. the depression underneath the leading indicator. So if you trade tomorrow, trade smaller, define your risk. Before you click, watch what's getting sold, not what the headline says. And I would just say that if this was useful, make sure you hit subscribe, because I do this every market day after the close. So drop a comment with your level you're watching at the open tomorrow. I read every one of them. See you at the bell. Take care. Bye-bye.